So just for a second, go ahead and put on your tinfoil hat. I'm not really a conspiracy theorist. I really believe in the simple answer, the obvious answer, the clear answer is probably the best answer. But every once in a while, I like to put on my tinfoil hat and kind of think about where it would take me. And I put it on back in September of last year when Ben Bernanke came out and said he was not going to cut back on money printing. And my tinfoil hat theory is that prior to that, he thought Larry Summers was going to get the next chairman position at the Fed. But when his name started floating around, it had a huge amount of backlash from the public and from other interest groups, and it became very clear very quickly that Larry Summers was not, in fact, going to be the next Fed chair. At that point, he realized that Janet Yellen was going to be the next person. She had a very different point of view on money printing than Larry Summers. So that's why there was this big kind of miscommunication back in September. So this got me thinking, Ben knows who the next chairman was going to be and is going to be. And in his December meeting, he said he was going to cut back money printing by $10 billion. Now, obviously, he had talked with Janet Yellen about this because she was going to be handed the baton next. And so she and he, of course, were talking about what kind of direction they wanted it, or she wanted to go before she got in. So I came up with this idea of what Ben and Janet, or Bernanke and Yellen, are really wanting us to do. And that came up with my theme of the week that I wanted to discuss with you. Hey there, this is RC Peck, and the theme for this weekend's podcast is, what if Bernanke and Yellen really did want people to buy this sector? There is this sector that is acting very differently than it has been acting the last 2 years. And something very important happened the last couple weeks that I want to share with you. And it's about a company, a very large company, about a $60 billion market cap company that's based in Peoria, Illinois. I grew up in Illinois, Midwest boy. And the company is Caterpillar. And when you look on the screen here, you can see a price chart of Caterpillar going back to about mid-2004. But basically January 1st of 1985 till today, this stock's gone from about $3 to $95. And if you look at the red line on the screen, you can see that it had a really hard time getting above that $82 mark. But once it broke above that in '08, or it tried to break above it in '08 but couldn't, collapsed with everything else, and this really collapsed. I mean, Caterpillar fell from $82 to about $25. That's about a 67% fall. The market over the same time period fell 58, so this definitely fell much harder. But notice it got right back up on its feet on March 6th, 2009, like everything else, broke above that $82 mark, and has really been consolidating since then. And if I zoom in on this picture, you can see this is the same price chart, just zoomed in on it, how it couldn't get above, Caterpillar couldn't get above $83, but then finally broke above it at the end of 2010 and pulled back. Now look at this. In September of 2011, where you see my cursor here, that actually was the peak of precious metals, both gold and silver. It could very well be that Caterpillar saw what was happening before the precious metal mining industry did, or before the price in gold and silver, and kind of peaked up here and fell back down and then moved back up, but couldn't get above that. But it stayed above this $83 a share. Now, why is this so important? When something consolidates, when an investment, when a stock, when a bond, when a commodity, when a currency consolidates above its lifetime high, that is very, very bullish. And that's what Caterpillar's been doing since the beginning of 2011. It broke above, broke down a little bit, but it's been consolidating above its 2006, 2007, 2008 high, broke above it, and it pretty much has stayed above it. This is significant because Caterpillar products are purchased by a lot of precious metal mining companies around the world. So what would push Caterpillar's price higher? Well, I think Bernanke and Yellen are telling us something. I think they're saying, guys, get some precious metals. Look, one of the largest players in the precious metal mining sector is Caterpillar. They sell them all the cool equipment, and their price is going up. So much so, I zoom in a little bit more here with this price chart. Look at this. Since December 3rd, okay, this is about December 3rd right here on the screen, it has been moving basically straight up. That is the same time period that gold has been moving up. Now, while everything else is going sideways to down, Caterpillar, which has been consolidating over above its lifetime high, and gold have been moving up since December 3rd. Now, one last chart for you, and let me just kind of step back and tell you what you're looking at with this chart. There's three squiggly lines. Just notice how the blue line, which is from December 3rd till market close on Friday yesterday, that blue line is precious metal mining stocks, which is up 14%, a little over 14% since that December 3rd. Over the exact same time period, Caterpillar's up 13%. These two are moving not in lockstep, but pretty much every end of the week, end of the month, they're both moving in the same direction. During the same time period, the exact same time period from December 3rd to February 7th, the S&P 500 is down 0.5%. So clearly there is a separation. Not everything is falling with the market. And what's also interesting is when the market went sideways, these two went up. And when the market fell, these two went up. And when the market went up, these two went up, meaning precious metal mining stocks and Caterpillar. So one thing to take away from this is Caterpillar is a kind of a side door way of getting into precious metals, because as precious metal mining sector heats up again, and it will after falling 70 percentage points from that September 2011 high to December 3rd of last year, as that moves higher, and it is already moving higher, Caterpillar is going to move higher with that. So this is a nice way to get into precious metal mining if maybe owning gold or owning precious metal mining sector is something that you may not want to do. But just also noticing as the market has gone sideways to down this year, these two have not. Price charts are so powerful. They tell us where the money is flowing. They tell us where things are going, not where we want things to go or where we want stocks to go. But this is a solution to a lot of people's problems, and that is follow the price, and you can tell where your money will be treated best. Now, of course, the problem with that is some nuances. How do you know when the price is actually going up? Do you look at a year chart, a week chart, a day chart, an hour chart? And so there's some nuances with that, but that can get solved with some good coaching and some good education, so it becomes very clear what frequencies you look at. And once you know those frequencies and you know how to frame that, your ability to place your money where other money is flowing into is the way that you get your portfolio back to where you want it to be, and want it to be doing. So my final thought is that price always tells you where the smart money is moving, whether it's out of stocks, in or out of bonds, in or out of currencies. Prices and price charts give you that. It literally tells you. This amazing mechanism, this very simple technology tells you where money is flowing. Again, remember, it's the strategy that determines the size of your portfolio or how much growth you're going to get from the stock market, and not stock picks or sectors. Hey, this is RC Peck, and really here's to taking back control of your wealth so you can get the future that you deserve. You guys take care and have a great weekend.